Okay, so what kind of situation do we currently have on CAD CHF? Now, CAD CHF is starting to be a very interesting pair for a potential trading opportunity. So let's speak about it. First of all, on the monthly, what do we have? We have a market that has approached a very strong level of demand. All this zone here is very, very strong demand for this market. In fact, when the market had reached this level from a monthly perspective, it was rejected to the upside very aggressively, and currently the market is testing this zone again, and we can expect a reaction to the upside. Going down on the weekly time frame, what do we see? Now, on the weekly, we see all this move to the downside. Now, why did the market make this move to the downside in the first place? Now, to answer this, we have to go back on the monthly. And the answer is pretty simple. The market from here had created this impulse to the downside. After the impulse, you expect a retracement, which is exactly what the market did. And if you want to measure the retracement, what are you supposed to be doing? You're supposed to be taking your Fibonacci from the high to the low of the impulse. And you can see that the market retraced exactly to the 0.618, which is the golden ratio and is also the level that is aligning the best with structure. Meaning that we had a confluence of resistance here because we had the previous monthly support, now turn resistance at this area in confluence with the 0.618, from which we definitely expected a rejection, and we wanted definitely to see the market make this move to the downside to at least try to create the next impulse to the upside, to the downside, after the retracement. In fact, if you remember, we spoke about CAD CHF when the market was here, saying that we definitely expected this move to the downside, and that is exactly what CAD CHF did. Going down on the weekly as we were, what we can see. Now, we have seen and understood why the market made this move to the downside. Now, where is the first level of structure that the market can hit in this move to the upside that the market is currently doing? The first level that the market can hit is this zone here. Why? Because we have previous weekly support here, now turn resistance at this area. In fact, before making this move to the downside, the market created one candle to the upside, which is exactly this green candle. And after this move to the upside, the market broke to the downside. So the previous support, now to resistance, is exactly here, and we can expect the market to go and test it specifically because the market has created this candle here, which is the candle that the next one is supposed to fill in the wick, and in fact that is exactly what the market is currently doing. Going down on the daily, what do we see? Now on the daily, we can see that an opportunity might be lining up very nicely soon. Why? Because we have the market that in going to test the resistance that we have already identified on the weekly. And by the way, let's make it visible also on the daily so that I can show you better what I mean. The market in going to test this structure here that we have on the weekly is creating this W formation. So basically, if the market, and we don't know if it will happen, because here we know that we have resistance. So from here, the market can easily make the move to the downside. However, if the market will actually manage to reach this area, we will have a W formation retesting weekly previous support, which is now turned resistance at this area. So if the market will actually manage to reach this zone, then at that point, we will have a very good opportunity. Because inside of this area, we will have the possibility to be looking for a nice short for a rejection of the weekly structure and completion of the daily W formation. So basically what we will be doing with students. Now, before I show you that, let's go and give a quick check at what we have from a COT perspective if we check the CAD and the CHF. So what the biggest banks and institutions are currently doing both from a CAD and a CHF perspective. Now, if we check the CAD, what we can see is that with the last report, net positions reached minus 23K. So overall, institutions are starting to add again shorts on the CAD, because if you're closing a massive amount of longs, what you're actually doing is shorting. So clearly on the CAD, the positioning is shifting back to the negative side. And if we go and see what we have from a CHF perspective, we can see that CHF is getting very strong with longs reaching the 21K mark and net positions going to 11K with a 38% long exposure and 70% short exposure. So overall, institutions are selling CAD and buying CHF. So if the market will manage to reach this area, we definitely have the possibility to complete this pattern to the downside. So what we will be doing with students, if, and again, we don't know if the market will reach this area, but if the market will reach this area, here is where the opportunity will be, because as usual, trading is reactive, not predictive. But if the market will manage, at that point, we can react to the market reaching this area, and with students, we will be monitoring price action on the 4-hour time frame instead of this area, waiting for the market to shift from a bullish to a bearish market. And as soon as the market will shift from a bullish to a bearish market, we will be taking a nice short with a very good risk to reward and very good probabilities for the market to give us this move to the downside, completing the daily W formation and rejecting the weekly structure that we have just identified. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.